Hello, traders out there. This is Ancient Roman Trading Secrets with General Romulus. That's me, General Romulus, from Backpack Trader. Welcome to our show, everybody, and I'm glad you could join us. And it is one heck of a day to be joining us and learning about ancient Roman trading secrets. One of the most important secrets from ancient Rome that I have been imparting upon you, the trading public, for the last 5 and 6 weeks has been to be very careful about this stock market. Yes, very careful. Why? Because we're in a bear. That's right, we're in a bear. Yesterday, the bear left the picnic temporarily, as you could see from a nice 3% jump in the S&P 500. But in the trading world, we call that a dead cat bounce. See, this cat doesn't look very alive, does he? Nope. Drop it from a tall building, it will bounce before it goes even lower. And a few days ago, we talked about geometry. That's right, math class from high school. And this great big triangle. It's called a descending triangle. Descending triangles, well, that's what happens when dead cats bounce. Look how friendly this bear is. Got a big smile on his face. Happy to see you. You're happy to see him. Well, you shouldn't be happy to see him. He has bad intentions for your portfolio. And so the market gods giveth, and then the market demons taketh. And that is what happens when you are in a bear market. Dead cats, well, they bounce. Bears, well, they show up. Triangles, well, they punch you in the gut. But this doesn't have to be like that for you all the time. As a matter of fact, it doesn't have to be like this for you at all anymore. No. Keep tuning in to your old buddy Romulus here. We'll take care of your trading and investing needs. Make sure you're right all the time. People always want to have reasons, especially the financial press, the media, the talking heads. Well, your financial advisor and a broker probably, so they can call you and blame your massive losses that you're experiencing on something other than their complete ineptitude. Okay, well, today we might as well talk about that a little bit. By the way, I don't spend a lot of time on why. My concentration is on what's next. That's right, what's next? That's what you should be asking your financial advisor. You say, Mr. Smith, you've lost me 20% so far in 2022. What's next? And he'll tell you with a big bear grin, I'm going to lose you another 20% in the next 6 months. As he laughs all the way to the bank to cash your fee check. And he's not down 20%, not at all. Okay, but we do have a reason of the day that we can talk about. The bond market, once again, is front and center, focused. Yesterday, the Federal Reserve increased interest rates for the second time in a couple of years, going up 50 basis points this time. But they said, oh, don't worry, everybody. We have this under control. Everything's going to be fine. We're just going to raise rates 50 basis points in June, not 75 like you guys have all been fearing. And this inflation, well, Jay, is it transitory? Because that's the mistake you made last summer, right before Jackson Hole. And by the way, I have a written report. Anybody wants it, send me an email, Romulus@backpacktrader.com, Romulus@backpacktrader.com. I'll send you the report, no problem. Right back in August, I was demanding that Jay Powell drop this transitory nonsense and start raising interest rates. Right then and there. Didn't have to go 25 or 50 bips back then when you're at zero. Could have started with nickels and dimes. That would have been fine. But stop the nonsense right back there. Transitory, no sir. Here, the 10-year yield. This is what the federal government will pay today to borrow money for a 10-year period of time. They'll pay 3.094%. This is the highest that it's been in, well, let's find out. Okay, the U.S. 10-year highest rate that it has been at right there, you see, since November of 2018. So you've got about 3.5 years rather going on in here, working on 4-year highs, not too far away. Look at that, just a little bit more push, just a little bit more push. And that rate will break out to a new multi-year high. Currency markets are still going bananas. Here's the U.S. dollar doing quite well, still showing strength. Why? Because our interest rates are higher than the rest of the world on an aggregate comparative basis. So people are flocking into the U.S. dollar to get that higher interest rate, which, by the way, creates, well, threats and opportunities depending on which side of the ledger you're on. If you're on the same side of the ledger that we are, if you're with Club Romulus, which I don't know why you're not, I mean, we're making money this year, and that's where you should be. But anyway, so companies like Coca-Cola have done well recently, as you can see, because there's a safety factor trade coming into play. However, they're going to run into currency issues. Okay, Procter & Gamble's been doing well. They're going to run into currency issues. Companies like Caterpillar. Okay, these companies are corporations that do a lot of their sales overseas, and now their products are more expensive in any other country. Their competitive products are cheaper in America than in quite some time. So there's a problem with their balance sheets coming up. This will really start to impact them in the next quarter, the one that we're in, and also the third quarter as well. It's going to be an issue for the major exporters. The major US-based exporters are going to have problems because of the high currency, the high value of the dollar. Okay. The rest of us, we benefit. We benefit as consumers because we can go ahead and now buy foreign-made goods for far cheaper than we could have a little while ago. If I were in the market for a car, I'm not right now, but if I were, I'd be looking at a Honda or a Toyota right now. Okay, maybe even a BMW, Mercedes, something from Germany. Looking to travel, go to Japan. Go to Japan. Go over there right now. You get the best deals on hotels and restaurants and travel and everything else than you've had in 21 years. And it's an opportunity to buy small villages in Japan for just the change that's in your pocket. Something that has this currency is, look at that. It just kind of trends down a little bit and then it just gets absolutely smashed. Okay, absolutely smashed. That's that nonsense interest rate policy. And quite frankly, the socialist government over there thinking they can have their cake and eat it too. And quite clearly they cannot. Their economy will start to suffer over the next year and two based on what we're seeing in the currency right here. It's showing it. The chart is saying it. Believe in the power of markets, everybody. That's one of the ancient Roman secrets that I hopefully can impart upon you. If the stock market closes down here at these levels, and there's quite a bit of time to go, 4 hours before the market closes, it's roughly noon, Thursday, May 5th. It's Cinco de Mayo, everybody. Hey, your old buddy Ramos almost forgot about that. Oh, I just noticed something that I want to bring to everyone's attention. The bear market so far has done what it does, and that's drive the speculators out of, well, the highly speculative areas. And one of those speculative areas was the cryptocurrency space. Not the only one, of course, but that was one of them. And Bitcoin in here, unable to sustain a rally, very, very correlated to the S&P 500 over the last several months, unlike the way it was for prior years, but very correlated to the S&P 500 recently and probably going forward to some degree or another, and couldn't get really above the 200-day moving average. After that late March rally, the S&P 500 went up 10%. This went up even more from the early March lows. But look what's happening right now as we speak. Okay, this is actually live action. This is happening right now. And no surprise to any of my Centurions. I've told everybody on a longer term basis to be really careful of these things. I've been dollar cost averaging Ethereum for the past, 14 months now. And I believe that over a 10-year period of time, Bitcoin and Ethereum can survive, which is why I continue to buy that. But it's a little bit. I mean, I buy just a little bit at the beginning of the month. It's really not that much of a commitment. But for any serious money, I've been saying stay away from these things because they're in trouble. And here you are breaking down into a new multi-month low right now. Okay, you see that? You see that right there? Okay, that's very dangerous. That should put these lows into play here over coming weeks or probably another month or two or so down to the mid or low 30,000s on Bitcoin, taking the entire crypto universe with it. Of course, I'm speaking to an empty room right now on the crypto world. I get that. Again, the bear market did what it was supposed to do, and that's drive out the speculators. So I know really there's not too many of you guys that are concerned or caring about cryptocurrencies anymore either. Yesterday's news, right? Hey, how about that? So once again, to sum it all up, we've got breaking down to new lows in here just about on the stock market. If you want a reason, it's because interest rates keep pounding higher. And look at that. That's going to cause a big issue for mortgage people. They say that the average home price in America, or the average home price mortgage combination, means that mortgage payments are up $2,000 more than they were a little over 2 years ago. That's not $2,000. That's $2,000 more than they were right before COVID crash in February of 2020. And that's going to be even worse in the next couple of weeks based on what we're seeing in this 10-year yield right now. So even if the market does claw back today, because again, there's still a few hours left, even if it does claw back, ends up posting a gain for the day instead of a loss, that still would just be a trick. Okay, that still would be a bull trap because you haven't had a selling climax, you haven't had a capitulation low. Yes, rallies can happen The biggest rallies always occur in bear markets, not bull markets. Today and right now probably wouldn't be any different. But if I saw a rally into today's close, if I saw higher prices, I would be looking to sell short into that. I would be looking to get out of longer term positions if I had any left. I don't. I got out of everything on January 13th, right up there, right at the all-time high of the longest running bull market in U.S. history. That's documented. You can ask any of my Centurions. They got the email right there that morning with the S&P 500 1.5% below its all-time high after running for the longest running bull market in U.S. history. We got out right at the very top. Did your broker or financial advisor tell you to get out back then? It wasn't just stocks. We got out of bonds too, and bond prices are down anywhere from 20 to 25% in over that time frame. So big money savings there as well. Call your financial advisor, ask them, say, look, this is a guy Romulus. You can watch him on YouTube. You can get a little information. He's free. He told all the people to get out right there at the all-time high after the longest running bull market in U.S. history. And you didn't tell me, Mr. Financial Advisor. You didn't tell me, Mr. Morgan Stanley. You didn't tell me, Mr. Merrill Lynch. You didn't tell me, Mr. Goldman Sachs. You told me to stay in the market. And now I've got all these losses. And I read from the reports that your big guys are getting out, but you're keeping me in. This is downright criminal. That's what that is. So you got to take it to them. You can't be afraid of your financial advisors. They're going to talk you in circles like they always do, but you got to go right to them. And then you got to bring your business over here. Trade for yourself. Get some education. We'll teach you how to do it. All right, this is your old buddy Romulus. I'm heading back to the Forum in ancient Rome. Looking forward to a nice long weekend. You see there's the Forum right there. It looked a little better in my day. Shinier, a little more polish. Of course, we also had a floor, which has been, excavated and dug out many, many times over the previous several centuries. Anyway, that's where I'm going back to. I will see you again next week. This is your old buddy Romulus. Be careful out there. That's all for now.